Hey guys, I just wanted to do a quick end of day update. Tuesday, July 19th. Um, I like to do some of these here at the after the close or slightly before the close. But I just took some off here on the Dow. We bought them pretty well right after Brexit on the lows here, and I kind of pieced out. I was putting this in the room up around this level, 17,800. Took some more off into the prior highs, and then got flat on the new highs. I always want to try to get, you always want to take on new highs. A lot of novices or amateurs, they want to chase on new highs, but this is not, that's not the case. You don't want to be chasing or lifting new highs. You want to be selling into new highs. So we took some profits up here. I think it was like 18, right in front of 18,300 or so. And then, we also have some puts on S&P, so we like playing S&P and the Nasdaq from the short side. Not even short the Nasdaq right now, maybe a one lot. But I like playing the Dow from the long side against our short S&Ps or short Nasdaq position. So when you get knocked down, and if you're short, what you want to do is be building up your core short and S&Ps near the highs, which we were doing, and then on the Brexit, covering S&Ps and then starting to increase your exposure on the side you want to be long, which in this case is the Dow. So we bought actually really well here at the end of June. And then once the S&Ps went through 2150, I took off my short risk on S&Ps, and then I brought up my long exposure on the Dow. So I actually rebought. That's what this arrow is here. And then I just took let me look. I just took half or 2/3. I think I took 2/3 of that position off today. So we'll see. The Dow is definitely the strongest. It can keep going higher. There's some resistance based on if you do the regression channels. I don't have it drawn here, but into around 1880, 18,800. But we'll see. As far as S&P goes, this purple line is 2 standard deviations from the mean. So you can see here, this is the mean. Once you get outside of 2 standard deviations, it's just tough for price to stay within this trend structure. So I'm looking for a move back down, really back below the prior highs around 2120. A move back here towards the 30-day, which isn't drawn, but it's right in the middle of this band. That would be great. So I don't have any short futures on. I have some puts down here that I layered in. So I'd like to kind of realize some profits on those if we roll over. But the key trigger is going to be, you can see this on the hourly chart or the 4-hour. But you can see after Brexit here, when we made these lows, each higher low, each daily low is higher than the previous low. So the way I used to draw this on the Treasury desk is this is called a swing line. And this platform doesn't really have a good drawing tool for that, but Bloomberg did. But you can just track the lows here. Each prior day low, the market has not been able to take it out. You can even connect each low, and it'll just be a perfect zigzag line, which we call that the swing line. So as soon as you take out that low, the prior day's low, that's a sell signal in my model. You can short that, put the stop above the high. So that's what I want to see is the first day we get red, it takes out the prior day's low, which tomorrow will be 2151 and a quarter. Just call it 2151 to be easy. As soon as you take out that low and you close the day down there, I'll put on some short futures, maybe even buy some more puts, and then my risk will be above that day's high or above the prior day's high, or in this proximity. Earlier in the week, or maybe that was Friday, the high was 2168, so you can even use that as where you're wrong or your risk. That's where you're going to want to stop out, anything above 2168. That's pretty much it for stocks. Bonds, the same thing. I like this pullback. You can kind of see it. I got it marked up better on the other chart. But this is the 4-hour here of 30-year futures, so the market so far held right in front of the 200, which is to be expected. So this is the near-term downtrend that the market's in. If you want to pull this forward, all right. So as soon for this to turn, for the near-term trend to turn back positive, you need to take out some of these highs here. You really need to spend some time above the upper bands here, and then you'll have everything moving in a positive direction again from a trend standpoint. The weekly, the monthly chart, the daily chart, that'll all be moving back bullish. So right now this is just a near-term downtrend within the context of a bullish long-term trend, a bullish intermediate-term trend. So this is how you play these pullbacks. I nibbled there, I nibbled there, I took some off. If you buy 3 contracts, you take 1 off. You buy another 2 here, you buy another 2 here, or 1 and 1. And then this is where you want your size. You're buying 5, 10 contracts. Maybe the average trader, you're not doing that, but that's it's the same concept. You just make the size appropriate for you. But so I've been pretty consistent here. This is a dip you want to buy in the long bond, and we're getting back to levels now where this was a lower low, this is a lower low, this is a lower low. Here the market failed to really, it made a lower low intraday, came back up, bottoming tail. So this is the first sign that the market might be changing directions here. Anytime price fails to make a lower low, that tells you that maybe you're trying to turn the corner, and now we really need higher highs. So that would take place above 172.30, call it 173 the buck. You get above there, and I think the long bond can take off. That's going to coincide. It's the same kind of trade that gold is looking very similar. Here you can see the buys in the model. We're buying here, here, bought some here. Almost took some off today, but this is my average cost, so I'm just kind of waiting. Any move up here overnight, I might even put some offers up here around 1340, 1349. I like to step in front of kind of the whole numbers. Step in front of 1350. But on a 4-hour basis, an hourly chart, this is going to start to look more bullish. Alright, so you can see the same pattern here. This is a near-term downtrend, as you can see by the bands. This wave structure is down, right? And now we're starting to try to base, and we start to take out these highs in gold here around 1335, 1336, 1335, 1336. This is where the market keeps struggling near term. So if we get a nice hourly 4-hour close above, you get a bar that looks like this, you want to buy that. That would be new highs relative to these lower highs, and that'll give you a new intermediate term uptrend. So on that type of move, I'll probably double my position, maybe even get heavier. Just depends on how it looks. So those are the 2 things I really like to see. I'd like to see a long bond curl back up. I'd like to see gold curl back up here. Those 2 plays, global macro, I have the most conviction on right now. And then the same thing in stocks. I think we get that, finally break the swing lows to take out a prior day's low to make a lower low. That might be a good sell setup. The only problem here is you're shorting against the overall uptrend, so it just is what it is. I'd rather actually be buying dips like in assets or securities that are already in an uptrend, like gold and the long bond. I think that pretty much does it for this video. Copper's getting back to levels I might want to short. I put on the social medias today, we were taking more profits on Google. We bought well there. I'm pretty much flat there. I got some upside 770 calls that I'm just going to hold through earnings. But here I really want to dip back down below this band here, this wave structure. I want dips like here, 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 here. I want another dip down here before I put more kind of rebuy there, bring up my long exposure on Google. If there's anything else I want to touch on. Oh, of course, the dollar, the biggest thing in global macro. This was new today. here's this again, this move off the lows that I was highlighting. We stayed within 1/3 of the upper part of this candle, this bullish 4 day move. Formed a pennant, which is just a consolidating pattern. And then I said you get above 97, that should be enough to get it to release back into 99. You flirted with it today. It's kind of a weak close. This is just the dollar index, so it kind of matters more as you look at all the different pairs, but it didn't quite close above 97, so I wouldn't be chasing it too much right now, but I am long the dollar versus several pairs, still very dollar bullish, and I think we're going to get this move up to 99. Dollar trade's really strong, along with gold, which is very new. That correlation usually does not exist. It's something like 0.90 gold to dollar correlation right now. So in global macro, that's very, very, very rare, which just goes to show you that really anything's possible. You can have dollar up and gold up, and I think we will see that more also as the years ahead. Confidence continues to collapse in governments, which drives capital into gold. There's a lot of growth slowing issues that keeps the dollar bid. There's a lot of areas, whether Europe or Asia, a lot of Japan, there's a lot of areas around the world that you continue to see massive deleveraging and selling of riskier assets that are based in U.S. dollars. And it's just one big deflation trade. So dollar looks good, gold looks good. Rates continue to move lower. It's a lot of more of the same, deflation, growth slowing. That's pretty much it. It's the same kind of thing on the euro. The DXY is pretty heavily weighted to the euro, which everyone pretty much knows. But you can see the euro's trying to roll over again. I like how this wave structure is starting to turn bearish. We're back below pi. We're back below the 200 a day. So start to spend some time below 110. It's probably going to come overnight and into the London session. And then I would not want to be buying 109. That's not where you want to be trying to fight this thing. If anything, I'd rather be shorting more on a break of 109. I think that's what we're going to get. Looks like, again, back to the dollar index also, it looks like the market wants to try to move back towards these lows from last year and the euro, and push dollar wants to push back to the highs from last year, I think, even just the beginning of the year. Just seeing if anybody else is texting me here or wants to look at anything else. I think that's pretty much it for today. I'll try to maybe do one more video in the morning, some things to look for before the trading day for my guys. But listen, guys, if you want to work on improving your trading, you want to take advantage of some of our calls, go to my site, jenkinsrm.com. There you can join our free 24/7 chat room. It's a trading chat room. And yes, it's free. So we got guys in there trading futures, bonds, stocks, options, FX. It's a good team environment going on in there, and that's why I designed it like that. So we share our calls, trade ideas, analysis, and then you can also visit the site. I have some portfolio management services available, some investor services. If you want one-on-one training, you can contact me on the site. I do some coaching as well. So look me up there. It's jenkinsrm.com. And then, keep an eye out for our daily updates. And thanks for listening. Hope to see you guys in the room.